XRP trading to USDT. And by the way, I got this data from the backtest tool that I have here, the one that you can guys use to backtest any strategy to see what would be the return if you would have launched the board, let's say a week ago, 2 weeks ago, maybe a month ago. So that's something, guys, for you to always consider, because no need to rush. Just make sure that the configuration that you set is sound, it's credible, and for you it works the best. Okay. And so here, using the backtest mode, I could instantly find out that launching SBot from the 20th of November until the 24th of November, it would bring me 53% of the return. Whereas if I would have launched the classic bot on this same period, you see, 20th of November until the 24th of November, absolutely the same period. But the thing is that the classic bot would bring me 70% of the return. So here's a perfect visualization of how the classic bot outperforms the SBot on a rising market. So I hope, guys, this fully answers to your question when you should stick with the classic bot and when you should stick with the SBot. So we use the classic bot when we anticipate the market to move like here in this example on XRP, and we stick with the SBot on the sideways market. So yeah, Peter, answering to your question with regards to the sideways market formation, SBot is the one that you stick with, and let me just show you why. So think about the sideways market. By the way, sideways market is when the price moves like this. And actually, let me show you some real case scenarios. You see, we have 4 primary market phases. We have the accumulation phase. That's something that you can see before the rally. This is where buyers and sellers are fighting for the price equilibrium, and basically this is when buyers kind of accumulate the position, and as soon as sellers lose the power, they can no longer withstand the pressure from the buyers. Then you see the breakout of the resistance, and the price now goes higher. It establishes new higher highs. So accumulation is a perfect phase for this for the SBot, because that's basically the sideways market. In the advancing mode, that's something that I already explained. This is when we need to stick with the classic bot, as it brings us more returns on the rising market. And distribution, that's something that you see right after the advancing, because in the distribution, basically, those who made decent returns on this rally, they now lock in this return. So by locking in the returns, they need to sell it, right? So this puts selling pressure on the market, and that's why you see this stagnant period. This is where, again, sellers and buyers are fighting for the equilibrium price. So that's why, as you spot the distribution right after the advancing mode, this is where you can utilize the SBot, because we know that on the sideways market, SBot is the ultimate solution. Okay, so here we go, the SBot, classic bot, and the combo long. That's the one related to the combo bot for the futures market. Only with the combo bot you can generate returns on the downfall. That's something that you cannot do with the SBot and the classic bot on the spot market. It's only an option for the combo bot to generate your returns on the downside market. Okay, so let's go back to the platform and see what we can do. So let's say, yeah, the classic bot, the first one that I explained, and let's say I want, I anticipate the price to continue the rally. Let's say, you see, I have hour trading to USDT. Okay, let's assume that I think the price will move like this. Okay, so that's why I will stick with the classic bot. So maybe I will put my lower price here. So the first step for you to do, guys, is to define the trading range and look at the key price levels. So the previous highest high was here at the price of 578. So that's something that at least I anticipate the price to move to, okay, before it breaches this level and goes even higher. So that's my first target, and that's why I'm pretty satisfied with this current configuration, where I have my upper price aligned with the closest, like the closest key resistance price level. So this is the configuration you can stick with. Now the next thing for you to define is the amount of grid levels that you want to have in this trading range, because the more grid levels you put, the larger investment is required, because each grid level requires a certain minimum investment. And on Binance, for example, for the vast majority of cryptocurrencies, the minimum trade size, the minimum trade size for the limit order is $10. So that's why the more grid levels you have, the larger your investment should be. But we made it possible for you to quickly adjust the configuration. Let's say you wanted to allocate only 300 USDT in this configuration with 89 grid levels. It turns out that this number is not enough. It's not just sufficient. So you can either increase it, and in order to have 89 grid levels, you need to have the minimum of $990. So you can fix it. You can increase the investment allocation, but if you don't want this to do, then you just need to adjust the amount of grid levels. So with only 27 grid levels, you can afford investing in this configuration where you have only 300 USDT. And by doing so, your grid step is going to be 1.23%. So that's basically the distance between your limit buy and limit sell order. So that's the margin profit that you take from the market for each successful trade execution. And by successful trade execution, I mean the combination of buying low. So at first we have to see the bot executing the limit buy order, right? And then what it purchased at this limit buy order needs to be sold later. So that's why only after we sell this, what we purchased, that is when we have a successful trade execution. Buy and then you sell it. So it's exactly 1.23%. And by the way, all fees are already taken into account. So that means that the profit you see, like in my case of Tron, is net of all fees, closed orders. You see fee for each execution, because for each buy and sell order we need to pay the fee, and it's taken into account. So the profit you see here is net of all fees. So that's your pure profit. It's something that you already possess. That's something that is already on your balance and you can use it. So that's the cool thing about bitsgap, is that we actually take the fee into account, so that the data you receive here, like the visualized one, is transparent, and you don't have to go to Binance or where you're trading, like maybe OKEx, maybe Huobi, to check whether or not this profit is legit and it really is the actual return that you generated, which is, by the way, the case for some other platforms that do not actually calculate the fee, and the return they display as a final one is actually exaggerated. It's not the real one. It can be like by like 15%. Somewhat around this value, more than actually you earn, because it doesn't take into account the fees that you paid. So let's go back to the demo mode. By the way, in the demo mode, you have virtual money to trade with. It's a cool feature, because here you're using the virtual money. Basically, that's the market simulator mode, free risk. So as soon as you gain enough experience, you can then start trading your real money. So the demo mode is a cool feature for you to experiment and to develop your strategy memorandum and basically trading tips and tricks before risking your real money. So that's something that we have at bitsgap for you guys to offer. So let's go back to the initial configuration, like this one, 300 investment, I think. That's one we had adjust. So for me, this grid step is good enough. It's a decent value. I usually trade from 0.